Hello, namaste. Thank you for tuning into Quantum Investing channel. This is your host, Sarachalam Cherla. Today, we are going to talk to a guest. Before I introduce him, I would ask you to like my video, share, and also subscribe to my channel. This is really important for this YouTube algorithm to bring my videos up. The guest we are going to talk, he is an economist. He has done MBA in international business. Most of his career, he is into finance. He traded $1 billion pool of debt securities for a hedge fund company in Chicago. He was also an REI for an investment bank. Now he is into real estate investing. He has started 3 years ago and now he maintains portfolios in millions. Ladies and gentlemen, please welcome Seti Gershberg. Hello, Seti. How are you doing?
I'm doing fantastic, Sarat. How are you?
I'm good. I'm good. Thank you for coming on the show.
Absolutely. Looking forward to a great conversation.
We'll start with, could you please tell us yourself?
Yeah, sure. So a number of years ago, approximately 3, I joined a real estate investment community. I had been looking for a way to learn about how to invest in real estate. I started out by looking at a lot of websites, reading some books, and then I got this. It was an ad to attend a seminar. It was a seminar that was going to teach me a lot about how to wholesale houses, and wholesaling houses was pretty hot because it just made a lot of sense. You take control of a property for $100,000 and you sell it 10 minutes later for $110,000. So I was very excited to learn how to do that. And I went to this hotel seminar. It was a free day. And I don't know if you guys know, yeah, all these people watch these fix and flip,
Yes, I've been to the
TV shows, right?
Yes, yes.
Do you know Amy and Scott Yancey from Flipping Vegas?
Okay.
So they said that they were going to be there. So
All
that's
right.
what I was like, oh, they're going to be there. I got to go.
Okay.
So I went there, and yeah, they were there. They were there for like about 25 minutes, and they came up and they talked. And basically, what that event was a way to sell an upgrade to a program where I'd go to a hotel and spend a weekend and learn how to wholesale houses. So I said, well, I went to this free event and it was free. So sure, I'll pay a little bit of money. And I think it was like, I don't know, $1,500. And I went to this other event, and it was good. It was okay. I learned the formula. There was a mathematical formula on how to figure out whether a deal was going to be okay if you wholesaled it.
Okay.
But what accompanied with it was an offer to also spend an additional $40,000 to have a week when they would come back, because these guys come in, they spend a little bit of time with you. They spend the weekend, and then they're gone. And I felt like I needed more help, so they had this program, and I just thought it was too much money.
It was a continuation of the weekend thing, or was part of the weekend one?
No, it was additional. They were going to come for an additional week for $40,000 and do a bus tour around Phoenix and show us how to wholesale properties. So I didn't do that. Okay. And I continued to look. I went on websites like Bigger Pockets. There's so many people in this audience that probably done the same thing. It's like my experience is not different from many other people, right?
Right.
Well, eventually, long story short, I found a great community, and I joined the community, and that was 3 years ago. It took me about, 11 months before I did my first deal.
Nice.
But my first deal, I did. I took down 7 notes with some other people that I worked with.
Okay.
And shortly thereafter, I did another portfolio of about 21 assets. That was a great deal. We bought the last contracts for deeds from a hedge fund. The last of the last of the last of the last. They were getting out of the business. and we got them at about 11 cents on the dollar. So we got about $900,000 worth of assets for just under $100,000.
Wow.
And
That,
at least that's what we projected. I don't think it's going to come out to that 900, maybe 5 or 6, but it was a good deal. And then I wound up purchasing single family properties, basically rehabbing them, renting them, refinancing them, adding them to the portfolio for passive income, and ultimately figured out how to purchase portfolios. Our last purchase was about 40 properties. And I can't say that I do this on my own. I have a business partner who's really awesome, Jay Tenenbaum. Jay Tenenbaum's a nationally recognized speaker on notes. He's been doing note portfolio since 2013, and he and I partnered up a few years ago, and we just keep moving it forward.
great, great. So how did you get into this? And you explained that. So what were you doing it before?
Oh, well, good question. So I was always in corporate America. My background's in finance and marketing. I have an MBA from Thunderbird School of Global Management here in the Phoenix area.
Mhm.
And I always wanted to do international business, and I did for many years. And eventually I wound up working for a little private investment bank called William Blair in Chicago. And William Blair is a real top-notch firm. I managed a small cap growth stock portfolio there. We did offerings, IPOs for companies. We were very much on a lot of the covers, the tombstones for companies that Goldman Sachs is on. So you know them: Home Depot, Starbucks, Wynn Casinos, Best Buy, Amazon. Just lots of companies that everybody knows. And I managed this stock portfolio, and at some point I left, and I decided I was going to leave corporate America. And I moved to Peru for 2 years. I took off. I
What were
went
you
on an
doing there?
adventure. I went on a huge adventure,
Nice, nice.
and yeah, it was great. And eventually came back to the States. I was down there for 2 years,
Right.
and I said, I want to do something, but I want to control my own destiny. And here's the big thing, Sarat. I didn't want to work for somebody else anymore. I didn't want to commute. I didn't want to have the corporation, over me. I wanted to call my own destiny. I wanted to make income. I wanted to build wealth. And I looked around, and I said I could go back and work for somebody and earn a salary, and it just didn't fit. So I kind of took a chance. Definitely took a chance, right? I jumped all in. As I say, you jump off a cliff, and either two things are going to happen: you're going to fly, or you're going to fall and land on a ledge. So either one of those two things happened, and I wound up with this community. But real estate investing is great because you can work for yourself, you can call your own shots, you can do it with other people's money. Pretty much everything we do is with other people's money. We just come up with great deals that everybody wants to invest in. So, we don't put our own money into it. We just manage it well, and we deliver the returns that we promise. But ultimately, I didn't want the commute. I didn't want the boss. I wanted the money, and real estate investing is perhaps one of the only ways to do that. So I jumped in when I had the opportunity.
That's great. That's great. So the first deal you were talking about, right? So could you please talk more on that? Like, how did you find the deal and what are the challenges you have faced?
Yeah, great question. So my first deal was a pool of 7 notes. Some of them were performing and some were non-performing. And what I wound up doing was purchasing these notes with a group of 4 other people. We formed an LLC to do that, but we did it after taking a lot of education. So I mentioned before that my business partner is Jay Tenenbaum, and he's a nationally recognized expert in notes. Well, he taught this class, and in the class, I met these other students that were all like me. They all had had careers that they had done, project management. One guy was in the oil business. Another guy worked for IBM as a programmer. It was like a good group of people, but we didn't know anything about notes. And we started in April, and by August we closed on it. But we went through a lot of education, so it's really important that you know what you're doing. So you have to have a mentor, you have to have a guide, you have to have a teacher, someone who's knowledgeable, gives you the information. You build up some confidence and knowledge. We learned how to raise capital, and I had done that at my job at William Blair. I raised a lot of capital, so I was one of the only guys in the group who knew how to do that, and that helped. But ultimately, we decided to take that step, and we did it, but it was only after we were sufficiently educated that we could take that step.
That's cool. That's cool. So what is notes? Can we start there? So you said performing and non-performing.
Right. Yeah.
Like people generally, they know purchasing from Zillow, Redfin, or from wholesalers, or all this, right? So what is specialty with the notes? How different is
Yeah.
it from the regular one?
Well, it's a little different, but it's a lot the same. So when you buy a house, and most people know that you get a mortgage, right? You go and you take a mortgage, you buy a house, you get a mortgage.
Mm-hmm.
And the mortgage says that you have X number of dollars. Let's just throw out a number, $350,000. Your mortgage is for $350,000, and you're going to pay 3.25% interest for 30 years.
Mm-hmm.
Well, when you sign that document, you also sign another document. So you have the mortgage here, you have this other document. And the other document is called a promissory note. And the promissory note says, I promise to pay everything I signed off here on the mortgage. And that's the legal instrument that can be bought and sold. So what happens is let's say there's a couple and they've been living in a house for a while, and they both lose their jobs and they don't pay for 6 months. And the bank that has the mortgage decides that this is a very high risk situation for them. They do not want this anymore. When a bank has a mortgage with someone, they have to hold reserves. So they would rather move the mortgage off the books than keep all that money in reserves, because once they free it up, they can write other mortgages. It's a leveraged amount. So if they free up, let's say, for example, $100,000, they could write new mortgages to the tune of $1 million. So they rather release themselves from that. So they sell this note, this promissory note, at a discount. Typically, that happens in bulk. It starts at Freddie and Fannie Mac, or Freddie Mac and Fannie Mae. And a lot of the banks, they pool them together and they sell them in huge amounts to hedge funds. And then the hedge funds,
yeah, that's right.
Yeah, so let's say there's like 500 of those. 500 of those at $350,000 a piece, but they sell them at a discount, right? So they're moving them off. So instead of at a 350,000 price, maybe they sell them at 30 cents on the dollar, or 20 cents on the dollar, or 15 cents on the dollar. And then the other hedge fund buys them, and then they take them and they package them and they sell them to another hedge fund, who sells them to another hedge fund. Ultimately, they wind up back in a situation where they're offered to individuals. That's where Jay and I come in with our business, with Scottsdale Real Estate Investments, Scottsdale REI. And we buy those. And typically, the highest we'll ever pay is 50 cents on the dollar. We bought as low as 11 cents on the dollar, but we'll buy 50 cents on the dollar.
So it is irrespective of the market, whether it's up, down, doesn't matter. So these will be standard, or in the down market, if there is a recession, or do you think we will have a better price on the notes, or they are same irrespective of the market?
It will be a better price.
There will be a better price.
If the markets crash and there's a lot of supply, the actual price that you could buy for the discount will be greatly increased.
Nice. Okay. That's great. So buying through notes, right? Like, do you guys do multifamily commercial too, or single family only?
Yeah, we've never done multifamily or commercial. What we're building is a single family real estate portfolio. We're following the trends that we see. I think purchasing multifamily is awesome. There's great value add. I think if a particular situation came up, we would try to do that, but we've never done it. Our expertise is either buying single family homes, and that could be 1 to 4 units. So it could be just a single family, or it could be a quad or a triplex or a duplex. Um, and what we wind up doing is we buy it at a discount and we fix it up and we put a renter in it and we refinance it. We bring in investors, and we're holding that for the long run. So we're building a portfolio of properties. Once we did a few single families individually, we wind up buying a portfolio. Our last portfolio was 40 properties in Evansville, Indiana, and we like the Midwest because the Midwest is much cheaper. There's much less volatility. You could still get pretty good prices out there right now. So, and the rents are pretty high, so it works out pretty good. We like that model, and we're good at it. We specialize in building teams in different areas. Right now, we're moving into New Orleans. We found a couple opportunities there, and then opportunistically, depending on what happens, we may take down a property for a fix and flip here and there if it presents itself.
Nice, nice. So as you said, like, most of them are out of state. You live in Phoenix, right? So
Mhm.
how do you guys manage it? So how many at a time you deal, and how do you manage that being out of state? Do you go in person, take care of things, or you have a team there who takes care? How do you do
Yeah,
it?
it's funny. I've never seen any of the properties that I've purchased. Not one.
Wow.
I've
Wow.
never I've never been out there, but I do plan on going because I want to at this point. And what happens is you start making some pretty good money, and it's just a nice thing to do, right? So you want to go out and see what you have, but you do not need to do it. And this is the way I look at it. It's like okay, so the other half of me not wanting to have a boss or do a commute, the other half of me wanting to earn really good income and making big wealth. The other part of it was to be able to do it from any place in the world. So, whether I'm living in New York where I'm from, or, I love traveling to Europe. I've lived in South America. I love the coast, California. I don't want to have to be
Go back and forth.
stuck in one place. I want to be able to do whatever I do from other places. So what does that mean? The reality is when you're not there, you're not going to realize the best game you possibly have, right? Because there's always people that are going to charge a little bit more, or this thing's going to happen, and they're going to, there's going to be a cost to that. But for the most part, we find people are very decent and honest. Along the way, you're going to kiss some frogs, and they're not going to work out, and you get rid of them. We had a terrible, 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 terrible situation with a property manager in Evansville, and our occupancy when we bought our portfolio, 40 properties, went from 96% to 79% in like 4 months.
Wow.
And they were moving people out of our properties into other properties they owned. It was terrible.
The problem
So,
manage.
that happens. Yeah,
Right.
that
Okay.
stuff happens. We got rid of them. We got a new guy, new company, and now we're back where we were before. And things are going great and it's all good. So stuff like that happens. But here, we don't have to go there, right? So again, we're going to give up a little bit on one side to get something on the other. The other is freedom, the ability to operate wherever you want. So my plans are to live on the coast. My business partner, he may go off and do something else, but because we have the internet, because we have cell phones, because we have all that, we can do it from wherever.
Do it from anywhere. Yes. So, so all these properties you buy, are those rentals, or you sell them? What do you do?
So I would say over 95% of what we're doing is we're buying rentals and putting them into the portfolio. So we buy them at a discount. They're distressed properties. We rehab them. We put in a renter. We put in an investor. We rehab it. We refinance it and move on. we've done that in bulk, with our portfolios.
Great.
And the other, so that's part of the strategy. The other strategy is, as opportunities come along, we take advantage of them. So we have a wonderful fix and flip opportunity right now in New Orleans on 2 properties, and we have another one in Quincy, Massachusetts. So we take those as they come up, just because they happen to show their faces. They're extremely profitable. You don't see them all the time, and they just happen to happen. But for the most part, over the long run, we're looking to build the portfolio of passive income, and at the end, have a large portfolio that has a good valuation.
Great. Um, I have a question on that. So you said performing and not non-performing notes, right?
Hmm.
So when you buy in bulk, do you see an option to buy as a performing and non-performing, or?
Hmm. Yeah, in advance.
All right.
And non-performing notes are actually less expensive. You get a bigger discount. And the good news on that is that my business partner, Jay, is a former debt collection attorney. And because of that, he's got pretty good skills when it comes to loan modification. So finding a property that has an occupant that hasn't paid for 3, 4, 5, or 6 years, it is very often that we're able to go back to them and renegotiate the loan, but we're buying it at such a big discount that even though we're lowering their payment, they can actually pay it, and we make a huge profit. That probably happens about 75% of the time. The rest of it, people get in their own way, and you have to wind up foreclosing on the property and taking it back.
Sure.
But then you have multiple exit strategies, right? You
I,
can
I
flip it, you can
I'm
do whatever.
coming to that. So what are your favorite exit strategies you apply in your notes or doing all this?
So I personally like a balance. Fix and flips, wholesales will make you quick money fast. That's good. Put it in your pocket and you go on. But ultimately, rentals are, you're going to see probably in this economy,
For long
and
run.
there's a housing shortage. Owning property now for the long run really is the way to go.
So you said other people's money, right? So can you tell us how do you raise the money?
Yeah, sure. So primarily, we we get out and know people. We get to know people,
Right.
a lot of people, on a very consistent basis. I always say that you could have a beautiful Ferrari in your garage or your driveway, and if you don't have gas, you're not going anywhere. And the same is true with real estate investing. If you can't raise capital, then, well, okay, first, if you're born rich and you've got a trust fund and you got a ton of money, no worries. Go out and do whatever, right? You've got that. But if you're like most people and you can't raise the capital, you're not going to be able to get anywhere at all. So the ability to raise capital is fundamental to being a real estate investor. It's not just flipping the house. It's not just wholesaling. It's not anything else. It's being able to find people who have money. Now, who has money? A lot of people. There's trillions and trillions of dollars in retirement funds. A lot of those retirement funds are self-directed, and people know that they can invest in real estate. And then there are other people that just love real estate. I mean, it's a wonderful business because everybody just relates to it. We all live in homes, right? And people like real estate. So with that in mind, if you have a deal, there are people out there that want to invest in it. Lots and lots of people. It could be your friend, friends. It could be family. It could be business colleagues. So what we do is we constantly get out and show our face and explain what we do. We belong to multiple networking groups. We're on online networking groups. We have a podcast. We're just constantly putting our face out there. And truthfully, Surat, we never sell what we do. We never want to push anything on anybody. All we want to do is develop a relationship with someone. And if they like us and we like them and they ask us to send them, a deal, we're going to send them a deal that's already funded, no pressure. We're not selling them anything. They're taking a look at what we do. Okay, this was a rental property in Cleveland. You bought it for $45,000. You put in $13,000. You have a renter in it now for $1,200. This is your net operating income, and these are the distributions you're making to your investor. And then they say, I like that type of investment. That sounds pretty good. Whenever you find another one like that, let me know.
Right.
And then over time, of course, we're going to find something and we let them know. So it's a very easy process, and it just takes cultivation all the time. It's, in a sense, we're farmers.
Great.
We're just seeding our next harvest.
Great. So I see you guys have started a software application on the portfolio management, right?
Mm-hmm.
Can you tell us on that?
Yeah. So REI Blade is a software tool that's pretty revolutionary. When you start growing, when you have 2, 3, 4, 5 properties under management, likely you could handle it on your own. No big deal.
Mm-hmm.
I don't like to be called for cleaning out toilets in the middle of the night. So I would get a property manager, but maybe somebody else wants to deal with that headache.
Yeah.
But what happened was when we started pushing over 50 properties and having a lot of investors, every quarter we have to do quarterly reports, which means I'm going to my emails, my spreadsheets, my OneDrive. I'm pulling information from all these different sources to try to create a report for my investors. So I can have this nice email that explains everything that happened about, within that particular investment. And, when you're doing 3 or 4 or 5, you can handle it. When you're doing 50, it takes your eye off the ball. And when your eye's off the ball, what happens? Well, you can't buy anything else.
Yep.
And if you're doing anything else like refinancing, it just becomes problematic. So we thought, okay, great. Let's go out and buy an investor portal. Someone's got to have it, right? Wrong. No, I mean, people have it. They do, but it's just stupid expensive. There's a couple of companies out there, they're more targeted for much larger companies, multifamily, someone who's got, 6,000 units or, just very high-end companies. And we're not there yet. Hopefully we'll get there one day.
Mm-hmm.
But they're very expensive. And then we found one that was, on the low end side to offer this investment portal for about, I don't know, $500 a month. And it just was junk. Like it looked like a kid put it together. It just was terrible. So I spoke to a friend of mine and he said, yeah, we could build out something like that. And after about 6 or 7 brainstorming sessions, over a few months, we actually addressed what it really takes to be successful in real estate investing. So we identified 6 different areas. You have to be able to acquire property. Acquiring property means you need to analyze it and you need to figure out how to buy it. So that's one, that's acquisitions. You have investor management, which was our challenge point, our pain point. You have to be able to be transparent. You have to provide all your documents, your pictures, your videos, your spreadsheets, your JV agreements and all that, in one place. You need to be able to communicate with your investors. You need to be able to create reports.
Yep.
That's 2. You need to manage your assets. You need to be able to track the performance of those assets and on, and you need to be able to sell those assets. So you have these 6 areas, and REI Blade now works with all of those 6 areas.
Great. So what do you think about the current market conditions with the COVID and everything? I see the real estate is not much affected, I believe so far, but 4 to 6 months from now, what do you think it's going to happen?
Yeah, great question, Sarat. That is a big question. So we were about to close on some land here in Phoenix that we did not right at the beginning of COVID because we had an inclination that perhaps the market would go down. So we backed out of a deal. We lost our earnest money deposit on it.
Oh,
And the reality is we can buy it today for the same price. So it's okay. But the market has shown tremendous resiliency. And why is that? Well, because there's much less that's being offered. So when we had a supply and demand imbalance before COVID hit, we still have a supply and demand imbalance. So even though there's less properties now and there's less buyers because all the people who were coming to town and
balance.
buying before are not doing it anymore.
All right. Okay.
But even worse on the selling side, people are just not selling. So the pricing of properties has just really
Hasn't
stayed the same.
much. Yep.
Hasn't gone up, hasn't gone down. So we've been doing strategic acquisitions. We're looking at mostly fix and flips now for us and our students,
Okay.
where we can get through them pretty quick because we don't know what's going to happen with prices down the road.
Great.
So I don't know the answer to what's going to happen in 4 months, but right now I know it's pretty solid.
Yep. Most of my viewers are investors and maybe first time, and they want to get into real estate investing. Let's say they have $10,000. Where do you think they can start?
Yeah, so it really doesn't matter what they have. They should keep their money and just go forward knowing that they can do, for the most part, any reasonable deal that they want with other people's money. That's the real key. You know, it's not what you have, it's what you can generate. So the real skill of the real estate investor is the ability to raise capital that you don't have from friends, from family, from colleagues, from outsiders.
All right.
And that's the way that you get started.
Great. I do have few rapid questions. So I want you to answer in one word, sentence, or but I want it fast.
Okay.
You ready?
Yeah. Well, I think so. I don't know what to expect.
It's about you or general prospect of what you think and all that. So
Gotcha.
the best habit you are proud of.
Determination.
Best app or tool you use on daily basis.
REI Blade.
Best book, blog, podcast. And a podcast, it'll be yours, I guess, but
There's only one. Think and Grow Rich by Napoleon Hill.
Think and Grow Rich. All right. I read that book. It's pretty good. First thing you do every day after you wake up.
Meditate.
Nice. Name 3 most important things to you.
My daughter. Yeah, my daughter. 1, 2, and 3.
That's so sweet. What is your best time of recreation?
Oh, movies. I'm a huge film buff.
Oh, nice. Best quote you could think of right now.
Okay. I'm not going to get this one exactly right, but it is, don't take the path most traveled, go instead and make your own path.
Yes. What do you get inspired by every day?
I get inspired by being optimistic about our future, that it's our choice as individuals, people, everybody on the planet every day. If you have an optimistic thought and you move it forward, things will be really great in the future.
Yep. Life is, fill it up.
Life is a roller coaster, so really enjoy it.
Great, great. Thank you, Seti. Really appreciate your time here. Uh, Thank you again.
Yeah, thank you, Sarat. This has been great. Awesome questions. I appreciate it. And best of luck to you with everything.
Thank you.